Hey guys, it's Steve with Futures and Charts back at you here on Wednesday, and it is December 7th or January 7th, 2026. And some interesting developments, of course, you've probably heard with the stuff going on in Venezuela and uh, how we are probably indirectly, but on purpose, putting the pinch on China because 41% of the oil from Venezuela was going to China, and that is not no longer going in that direction, and it's coming our way. So that's going to have a huge effect on geopolitics and possibly how China looks at us as a maybe a trading in the trade wars and stuff like that because of they're supposed to buy what was it, 25 million bushels of, or I think it's metric tons of soybeans, and they haven't really reached that yet. And it was supposed to be, I think Scott Bessent said by the end of February. So it's going to have to bring them to the table um, to buy more soybeans, possibly corn, wheat. I don't know, but it's going to have it's this thing is really going to shift the tables in our direction, I think. So um, it'll be interesting to see how this all shakes out. And I don't know. I'm starting to think that we'll look at the charts here in a second. But if you remember back when oil shot up to $147, I think it was in 2008, maybe. Um, it had a complete collapse after that, which a lot of times happens when you've had a a move that was more than it should have been. So it actually corrects the other way. So, um, and companies were literally paying to have their oil bought. So, um, yeah, the futures market just went kind of bonkers on that thing. And I'm not saying we're going to do that, but it could create some kind of a collapse in the domestic fuel market. I don't, it's just my guess. I'm looking at it to go down to on the futures at least $2. So for the February contract, and we're at 207 something now. So um, I know they won't want it to go down too low, just because of the fact that it needs to be a certain price in order for these companies to make money and to continue to explore and all those things. So that I wouldn't think it would want to get too low. Just a number that, if we get I think we're going to go down to $54 a barrel. Just by looking at the charts, that's kind of what it looks like it might want to do. But it could go lower. We could have some kind of a retaliation that actually maybe pushes it back up. If the Chinese get ticked off a little bit about what's going on and start rattling some sabers, who knows what could happen here. So anyway, I think best thing to do is just take out all the noise and just look at the charts and see what it's telling us. So um, that's what I try to do. So anyway, let's go have a look at the charts.
Well, so here's a look at the futures. Crude oil is down 76 cents, and looks like February diesel is down almost a penny. So still kind of inching our way lower. And this is a look at the chart here for diesel. And as you can see, yesterday, because the last time I talked to you was on Monday, and we had a green candle that day, and we bounced up to here, but then it actually broke through the trend line here. So the next line of resistance then is right around the 201 and 2015 number. So that would be this right here, roughly. And so that would be kind of the next resistance I would see. Then we'd be looking at another line of resistance here at about 197. And then, of course, the low back here, which if you include the wick, was 193, where it actually opened up that day was at 195.59. So those would be lines of resistance to the downside now. And I would not be surprised if we tried to get down to this $2 level. So, because like I say, this line here, this trend line here, is now going to become resistance, and I just, it's going to trade. It's going to trade in here. If it gets down to 2, it'll probably bounce, just because that's a psychological barrier, and then this 201.5 level here possibly. So right in this area, then it would probably bounce up, and it would probably run into resistance right here. So we would be, that's where the strings would start to get a little tighter and tighter as it get into this wedge here, and it's going to break out one way or the other. So that's just kind of what I see in the chart. And let's have a look at crude oil. Crude oil is still trading within this channel. We're back down, and we're trading about in the median line of this channel. So there's room for it to go down to 54 if it follows this trend and wants to touch this again. So I would say 50, 54, maybe a little lower is a possibility, and that's definitely how we would get down to that $2 range on the futures here. So that's what I'm seeing in this right now. It could, there could be some news that comes out that just reverses this thing and gets it popping back up like I talked earlier, because I don't think this stuff with Venezuela is obviously not going to make China too happy. It is a strategic move on our part that I think caught a lot of people off guard, that the taking Maduro, there was a lot of other implications that went into that, and it's starting to show now. And China not getting oil, of course they can get it from other places. Like this Venezuelan oil is probably going to replace some of our Canadian oil imports, and so that Canadian oil is going to have to find a home. So it may go to China. Hard to say. It's just going to change how things are right now. Is about all I can say. So we'll see which direction it goes. But that's what I got for you in this one. It'll be kind of interesting. If things are really wild tomorrow, I usually do Monday, Wednesday, Friday. I'll probably go ahead and do another one tomorrow just to keep you updated. So we'll just have to wait and see. So, all right, guys, thanks for watching Futures and Charts, and we'll catch you in the next one.